Question 901. An escrow agent for a property transaction is required by law to deliver the uniform settlement statement to the parties by A. 5 days before the closing date of the property transacted in, B. On or before the closing date, C. On or before the closing date, unless the borrower has signed a waiver agreeing to a delay, D. There is no deadline for delivering the settlement statement. Correct answer is C. On or before the closing date, unless the borrower has signed a waiver agreeing to a delay. The Uniform Settlement Statement, HUD 1, prior to TRID, or the Closing Disclosure, CD, serves as a final accounting of a real estate transaction. It details all the costs and credits for both the buyer and the seller. The primary purpose is to provide transparency regarding the financial aspects of the closing. By law, the escrow agent is generally required to deliver this completed statement to all involved parties, the borrower, seller, and lender, on or before the closing date. This ensures everyone has a clear understanding of the final financial terms before the transaction is finalized. However, a specific exception exists for the borrower's receipt. Under very limited circumstances, such as a bona fide personal financial emergency, a borrower can waive their right to receive the statement before closing. This waiver must be in writing. If such a waiver is executed, the forms must then be provided to the parties as soon as possible after the closing. Question 902. When a house is being shown to prospective purchasers, an owner should not do the following. A. Make sure no light bulbs are burned out. B. Keep the house cool when it's being shown in the summer and warm in the winter. C. Clean the drapes. D. Maintain eye contact with the potential buyers, following them from room to room. Correct answer is D. Maintain eye contact with the potential buyers, following them from room to room. This action can make potential buyers feel uncomfortable, pressured, and unable to speak freely with their agent or openly discuss their impressions of the home. It's best for owners to either leave the property during showings or remain inconspicuous, allowing the agent to guide the buyers. The other options are generally recommended actions to make the house more appealing. Good lighting makes a home feel brighter and more inviting. A comfortable temperature enhances the buyer's experience. A clean and well-maintained appearance contributes positively to a buyer's perception of the home. Question 903. Investor Zoe purchased a home for $300,000, using $50,000 of her own money for a down payment and financing the balance. 1 year later, Zoe sold the home for $325,000, realizing a 50% gain on her investment. This is an example of A. Escalation, B. Marginalization, C. Leveraging, D. Hard money investing. Correct answer is C. Leveraging. Escalation is a clause in a lease that allows the rent to increase over time, often tied to specific conditions like inflation or increased property taxes. Hard money loans are short-term loans typically used to finance real estate investments, especially those involving distressed properties. Marginalization is not commonly term used in real estate investing. Leveraging refers to the use of borrowed money to increase potential returns on an investment. In this case, Zoe used borrowed money to purchase the $300,000 home with only a $50,000 down payment. By leveraging her investment, she was able to amplify her return on the $50,000 she invested, which is a much higher percentage than if she had purchased the home with all cash. $25,000 per $300,000 equals 8.33%. This amplification of returns on equity through the use of debt is the definition of leveraging. Question 904. A is a licensee who tries to find a buyer for the property but who is not the listing agent. A. Selling agent. B. Alternate agent. C. Cooperating agent. D. Specialized agent. Correct answer is C. Cooperating agent. A cooperating agent is a real estate agent who is not the listing agent but works with the listing agent to find a buyer for the property. They cooperate to facilitate the sale and earn a commission. This emphasizes the collaborative nature of the role within the real estate transaction ecosystem. Question 905. It is important for brokers to carefully review their clients' real estate forms because A. They can charge clients an extra fee for such review, B. It is their professional responsibility to their clients. C. They can protect themselves from losing their commission, D. They can insert clauses advantageous to their client which the other party's broker will fail to notice. Correct answer is B. It is their professional responsibility to their clients. Real estate brokers have a fiduciary duty to their clients, which means they must act in their clients' best interests. This includes carefully reviewing all real estate forms to ensure that they are accurate, complete, and fair. By reviewing forms, brokers can help protect their clients from potential legal and financial risks. Question 906. The main purpose for the creation of the Federal National Mortgage Association, Fannie Mae, was to A. Generate funds to pay down the federal deficit, B. Increase the money available to housing, C. Provide funds to large home builders in big cities, D. None of the above. Correct answer is B. Increase the money available to housing. Prior to Fannie Mae's creation, the housing finance system was unstable, with high down payments and short loan terms making homeownership difficult. Banks often lacked sufficient funds to issue new mortgages. Fannie Mae addressed this by establishing a secondary mortgage market. It purchased government-backed, initially FHA-insured, mortgage loans from primary lenders, banks and other financial institutions. By buying these mortgages, Fannie Mae freed up capital for lenders, allowing them to reinvest those funds into making more new home loans. This continuous flow of money into the housing market made mortgages more available and affordable, thereby promoting homeownership and stabilizing the housing sector. Question 907. In a time of deflation. A. There is a rise in profits by business, B. There is a rise in the gross national product, GNP, C. There is a rise in the value of commodities, D. There is a rise in the value of money. Correct answer is D. There is a rise in the value of money. Deflation is the opposite of inflation. It's a general decline in prices for goods and services across an economy. When prices fall, the purchasing power of money increases, meaning each unit of currency can buy more goods and services than before. This effectively makes money more valuable. Deflation usually leads to decreased consumer spending and falling prices, which can significantly reduce business revenues and profits. Deflation is often associated with economic contraction, reduced demand, and decreased production, which would typically lead to a fall in GNP, not a rise. In a deflationary environment, the prices of most commodities, like oil, metals, agricultural products, tend to fall, not rise, due to reduced demand and overall price declines. Question 908. Which kind of estate provides the right of survivorship? A. Joint tenant, B. Tenant in severalty, C. Life estate, D. Tenant in common. Correct answer is A. Joint tenant. Tenant in severalty is a form of ownership where one person owns the entire property. There is no right of survivorship in this case. A life estate is a type of property ownership that lasts for the lifetime of a specific person. It also does not have a right of survivorship. Tenant in common is a form of co-ownership where two or more people own a property together, but there is no right of survivorship. If one tenant in common dies, their share of the property passes to their heirs. A joint tenancy is a form of property ownership where two or more people own a property together. A key feature of joint tenancy is the right of survivorship. This means that if one joint tenant dies, their share of the property automatically passes to the surviving joint tenants. Question 909. These terms, square foot method, unit cost in place method and the quantity survey method, are related to A. Institutional lender, B. Mortgage companies, C. Appraisal, D. Bulk sales. Correct answer is C. Appraisal. These three methods are commonly used in the field of real estate appraisal to estimate the cost of construction of a building. The square foot method is a simple way to estimate the cost of building a structure. It involves calculating the total square footage of the building and multiplying it by a cost per square foot, which is determined by comparing similar buildings. This method is quick and easy to use, but it may not be accurate for complex or unique buildings. The unit cost in place method is a real estate appraisal method used to estimate the cost of constructing a building. It involves breaking down the building into its individual components, such as walls, floors, roofs, and plumbing systems, and estimating the cost of each component per unit, e.g., cost per square foot for walls, cost per linear foot for plumbing. The quantity survey method is a detailed cost estimation process used in construction projects, including real estate appraisals. It involves breaking down a building into its individual components, calculating the required quantities of each material and labor, and estimating the cost of each component. Question 910. A primary residence is a person's A. Largest home, B. First home, C. Main residence, D. Newest home. Correct answer is C. Main residence. A person's primary residence, or main residence, is the dwelling where they usually live, typically a house or an apartment. It's the main place of residence for an individual or a family. This means it's the dwelling where an individual spends the majority of their time, conducts their daily life, receives mail, and registers to vote. It is distinct from secondary homes, vacation properties, or investment properties. A person can only have one primary residence at any given time, though they may share the residence with other people. This designation can have various legal and financial implications, such as eligibility for tax benefits and property exemptions.